Okay, so the market just closed out a 4-day winning streak, but if you peel back the layers, something kind of weird is happening. It's not one single story driving this rally. It feels more like a tug-of-war between two massive and maybe even competing forces. Let's break it down.
So what are these two forces we're talking about? Well, on one hand, you've got this incredible, almost sci-fi optimism about an AI supercycle. But then, on the other hand, the market is basically betting the farm on the Federal Reserve stepping in to cut interest rates. Let's see how they're shaping everything.
So to really get our heads around this, here's how we're going to break it down. We'll look at the day's gains, then dive into those two big engines, AI and the Fed. We'll see how they're splitting the market and figure out what it all means for you.
All right, first things first, let's just look at the scoreboard. On the surface, it was a really solid day of gains all around, painting this picture of strength right before the holiday.
Yeah, look at that. It's a sea of green. The S&P 500 and the Dow, they both climbed about 0.7%. But the tech-heavy NASDAQ, it led the pack, jumping 0.8%. That's 4 winning days in a row, folks. A pretty clear signal that the mood is positive.
Okay, let's get into our first major force. Engine number 1. The powerful and, let's be honest, seemingly unstoppable story of artificial intelligence. This is all about pure growth and a tech revolution.
In this quote from Dan Ives at Wedbush, it just perfectly captures the feeling on Wall Street right now. He says, we're in the early innings. You hear that? This isn't just some flash in the pan. It's a massive supercycle. And NVIDIA, they're the undisputed Rocky Balboa of the whole thing, just leading the charge.
But here's where it gets interesting. It's not as simple as all tech is winning. We saw this really fascinating split today. NVIDIA climbed 1.4% after saying its chips are a generation ahead. But at the same time, Alphabet, Google's parent company, actually fell over 1%. Why? People are worried its own chips just can't keep up. So this battle for AI dominance is creating very clear winners and losers, even within big tech itself. And the demand for the actual hardware, the stuff that powers AI, it is absolutely explosive. That number you're seeing, plus 5.8%, that's what Dell's stock did in a single day. The reason? They just massively increased their sales forecast for AI servers. So yeah, this whole AI infrastructure build-out, it's not just hype, it is happening right now.
All right, let's switch gears to the second engine that's powering this rally. And this one is all about the money. There is a growing, almost certain belief on Wall Street that the Federal Reserve is on the brink of cutting interest rates.
90%. Just let that sink in. 90%. That's the probability the market is giving to a Fed rate cut in December. So this has moved way beyond wishful thinking. Investors are now acting like it's a done deal.
And what's feeding this certainty? Well, it's the Fed's own data. Their latest Beige Book report basically said economic activity is flatlining and people are spending less. And here's the paradox, right? This bad news for the economy is actually seen as good news for stocks because it just strengthens the argument for a rate cut.
But it's never a perfectly straight line, is it? We got this conflicting piece of data from the weekly jobless claims. They actually came in stronger than expected, and that suggests the labor market is still pretty darn resilient. A strong job market could make the Fed think twice, and that's exactly why we saw that data push bond yields up just a little bit today.
So, you've got these two massive engines, right? AI growth and rate cut hopes. And what they're doing is creating this really divided market. Let's take a look at how this is playing out with some clear winners and some clear losers.
And you can see this great divide perfectly when you look at the sectors. I mean, check this out. On one side, you have information technology, which just soared 1.4%, totally fueled by that AI story. But on the complete opposite end of the spectrum, you've got communication services. It got dragged down by Alphabet's weakness, and it fell 0.5%.
So on one side of this divide, you've got a company like Dell. As we just saw, it's a direct winner from the whole AI infrastructure build-out. And its stock just flew today after they confirmed not only is demand sky high, but their profitability is getting back to normal too.
And then you have the complete other side of the coin. A company like Deere, the giant in agricultural equipment. Its stock plunged almost 6%. And the reason? It's a reflection of a deep and maybe long downturn in the farm economy. They're getting hit by tariffs, low crop prices. It's a totally different world from the AI boom.
So, this brings up a big question, right? Given this split market, where you've got blistering growth in one corner and a real slowdown in another, how on earth is an investor supposed to approach it? Well, the thinking points to two pretty distinct strategies.
And it really does break down into two main paths you could take. The aggressive route, you bet on the AI boom to keep on booming. Maybe use something like the SMH Semiconductor ETF. The risk there, of course, is that these stocks are already priced for perfection. The other option is to play it safe, go defensive. Think about sectors like healthcare with an ETF like XLV, or maybe even hedging with gold. The risk with that strategy, you might totally miss out if this powerful AI rally just keeps on running. Two very, very different ways to look at this market.
Okay, so we've seen these powerful forces at play and the split they're creating, but all this excitement, especially around AI, it raises a really critical question about the market's health and, its sustainability.
And you've got some very big names raising red flags. The famed investor Michael Burry, he's warned that these incredible profits we're seeing from big tech might be, well, a little bit of an illusion, that they're using aggressive accounting that could lead to some really painful write-downs down the road.
But then, at the very same time, the sheer optimism on Wall Street is just undeniable. You have major banks putting out these incredibly bullish long-term targets. Some are even forecasting the S&P 500 could hit 8,000 by 2026, all of it fueled by AI-driven growth. It's a huge divide.
So here's the bottom line. We have a market that's caught in this incredible tug of war. You have the promise of an AI revolution on one side and the cold, hard economic reality that's forcing the Fed's hand on the other. It's the ultimate growth story versus signs of a slowdown. So the real question for every single investor isn't just which force will win out. It's whether this AI rocket has enough fuel to power through the very economic weakness that everyone else is counting on to get cheaper money. That's the puzzle we're all trying to solve.